Face today. And there we go. How's everybody doing? My hair's a little wild today. Sorry for being a little bit late. Do want to greet anyone who may be watching this on a replay or something like that. Just let you guys know that I do notice that a lot of you guys don't watch me live. You watch me on replay. Just wanted to thank you guys for tuning in as well. Wanted to remind everyone, of course, that the super chat features are on if you feel so inclined. And I guess the big news for folks that are watching my channel is going to be SoFi numbers. Of course, I'm not on that conference call that is going on right now. I don't know exactly what to expect from that call. I do expect it's probably not going to be exciting either way. It's going to be more of the same with a lot of companies, which is increasing revenues. Things are doing just fine in that respect, but we're going to see costs going up, or we're going to see some losses. Already have a few questions here. So, and of course, that was noticed that same time as the SoFi earnings call. I tend not to listen to the earnings calls live. I usually listen to those kind of after the fact. But yeah, hold on just a second here. I am completely unprepared as I had a bit of a technical snafu to begin with here. Let me see here. All right. And let's add that to the stream. Okay. All right. So basically, I just kind of like this up as a distraction so everyone doesn't have to look at my giant head. All right. So PayPal earnings are up as well today. SoFi earnings are on top. Upstart, I think, is on August 8th. Did want to say thank you to Martin for the $5 super chat. And just want to say thank you so much. You've been a longtime supporter of my channel. And I'm going to get to your questions here in just a minute. And yeah, so let's talk about what's going on in China for a moment before we kind of dive into SoFi. People are probably going to chime in to SoFi as we see a little bit more on the earnings release. But yeah, so my thoughts on the Pelosi trip. This is a show the flag kind of trip. I can almost guarantee you that this is done in coordination with the State Department as far as showing support to Taiwan in a time like this. There's political posturing on both sides. The question is, what can China really afford to do at this point in retaliation for that? And I expect some degree of retaliation. It may seem childish at the time, or it may seem like it doesn't really matter. But the Chinese economy is in pretty deep trouble here. They have some internal issues that don't really have all that much to do with their export capabilities, but it's internal issues related to their debt markets and their property markets. They've had a few, of course, the Evergrande fiasco last year. There's a couple of other corporations that are in sort of the same type of situation. So what I do think that may happen is we may see a temporary effect on technology stocks. So you guys know who TSM is? That's Taiwan Semiconductor Manufacturing, or Taiwan Semiconductor something or other. So they have started moving operations out of Taiwan and overseas. They're building a giant factory in Arizona right now, and I do know someone who is planning to relocate to. He's actually a Canadian citizen, but he's planning to relocate there as part of his job. So Taiwan, like I said, this is big news on right now on Barron's. Speaker Nancy Pelosi visits Taiwan. Tech investors have good reason to be nervous. I tend to agree with that, although I tend to believe that these problems are going to be relatively short-lived. So as you guys, if somebody's sitting on the SoFi earnings call, go ahead and if you feel like chiming in, go ahead and do that. I'm happy to say that. So Taiwan Semiconductor and looking at their plans for expanding overseas, I think is the biggest indication of political instability. Now, it just makes a lot of sense on the part of a company anyway, to as a global and sort of multinational corporation, it makes sense to have operations overseas as well. So in case something does happen to Taiwan, they're able to survive outside of Taiwan. Maybe I think they have operations in Singapore, somewhere in Indonesia, somewhere in Europe, and of course now they're opening up a large factory in the United States. So yeah, go ahead and fire away with the questions here. And Michael Will, thank you for always attending my live streams. So I was gone for a while, guys. I actually had some family in town. Now, I have a family that adopted me, of course. I see them as often as I can, but I don't have a lot of relationships with any of my biological relatives. And so my cousin came this weekend, and man, did we party. And I'm actually a little tired today, but he just left this morning with his wife, and we went to Mexico for for a day, which is really close to my house, and we spent the rest of the time basically just eating good food while we were here and having a good time. So, excellent. SoFi Technologies after hours 678, 30 up 37 cents. Excellent. So Bram says, I think that China needs Taiwan just as it is. If China absorbs Taiwan, acquiring technologies will be much more difficult. That's actually a really good point to make about the geopolitical situation there. I think what China would really want is access to their tax revenue as well. But I think you are correct that it's easy to absorb, acquire, or outright steal technologies from Taiwan as they are right now. There were a number of different Chinese technology companies where you could almost say that they haven't ever created anything on their own, period. They simply copied what everyone else has done. That's certainly not the case with all of the companies. The one I'm really talking about is Huawei, where that seems to be just a really long exercise in industrial espionage or commercial espionage. So interesting. FFIE. Can you give a quick input on FFIE? Is this a pump and dump stock? Well, let's take a look at that. I'm going to bring that up here just a minute. Fire away with the questions, guys, because to be honest with you, I've been out of the loop for a couple of days. I've been really partying pretty hard. Wow, market is down 402 points today. Still in line with what I was saying before. We're going to see plenty of volatility over the next couple of months, but the trend line seems to be going up at this point. Tesla, of course, is up $9 and something a share. Let's take a look. On the day, as of today, SoFi is releasing the earnings. They were only up 5% or 5 cents before the market closed, up 32 cents after hours. That probably means some good news. We see here. Let's look at FFIE. Yeah, having massive technical issues earlier today. My camera just wasn't working. Oh, Faraday Futures. Yeah, in terms of Faraday Futures, it's an entirely speculative stock at this point. The main Chinese backer of Faraday Future, also has sort of a checkered background when it comes to business. He's had some successes and he's had a few things that were less than successful. So I kind of have my doubts about this stock in general, and it's something that I've been paying attention to. But there hasn't been a ton of news coming out about their actual technology, their process as far as how far along they are in terms of how much they're going to be able to manufacture. And but yeah, so Los Angeles-based firm is the latest EV startup to struggle with getting its first autos to market after raising money in public debuts. And this is an article from 7 days ago. But look, this is a company that may be based in LA, but it's backed by a Chinese entrepreneur, like I said, that has a checkered past. And to some degree, you could actually say that about a couple of our other famous companies too. There are people, and I guess it must be over my, no, I'm not. There we go. Faraday Future. And yes, and it's going to push back the production of this latest FF91 electric SUV in the US and aim to start building it in the third or fourth quarter of this year. Previously, the company said that production would start this month. So it needs to raise $325 million to produce the vehicle and fund its business through the end of the year. And then it was in negotiations with potential investors. In the short term, the company said it hoped to raise around $200 million through investment in private equity from professional investors. And it says the funds are needed to address rising raw materials costs and find new sources of parts. In a lot of ways, I think that their expertise in manufacturing is fairly amateur to a degree, and at least it was when I looked into the company. And it was extremely aspirational, and I wasn't interested in investing at the time. I haven't looked at it in the last couple of months, but as far as a pump and dump goes, I'm looking for where the pump is, and I'm not seeing it. So as far as I know, this company, other than the fact that it's up 21% for the day, there doesn't seem this is the reason why. They basically have got some breathing room here. So they executed a non-binding term sheet for proposal for convertible loan facility. This is what I was talking about last month. We're going to see a lot more in the way of convertible bonds and convertible term loans going forward as interest rates have risen, and it's going to make it more difficult for these companies to get funding on the market out there. So they're looking at doing potential senior secured convertible notes, which are not bonds, by the way. These are secured convertible notes with a potential principal amount of up to $600 million. The term sheet contemplates that several financial investors to be invested by Faraday Future, but not affiliates of Faraday Future, meaning these are people from the outside. They're going to invest a principal amount of at least $100 million, possibly up to $600 million. So, and there's going to be two tranches, each up to $300 million. First tranche note is planned for funding at close of the transaction, and investors will have exclusive option to purchase the second tranche of the note for a certain period of time of closing. So it looks like even at signing, they basically have enough money to last through the end of the year. Maybe that is reason enough for the stock to be up 21%. I don't know, but let's remember this is a convertible bond. They have to convince people that, number one, they're getting their money back. So what does that mean that it's secured? It is secured by the assets of the company. Do they have $300 million in assets? I'm not sure that they do, which means that somebody would have to be putting up a personal guarantee within the company. So, I am not skeptical that this deal does a lot to extend the life of this company beyond a few months. And I would hesitate to invest in this before I actually saw them in production, see their cars kind of out on the road, at least through the internet, and see that they have a real product. At this point right now, they don't really have a real product. They haven't sold anything. And So let me see here. Do you think the last few weeks are a relief rally? I know this isn't a textbook definition because of jobs and supply chain issues. Could there be further jobs? I think you mean further job losses. I think further job losses are a certainty at this point. Remember, the Federal Reserve wants the economy to slow down in order to reduce demand a little bit, in order to control prices. So they're perfectly willing to sacrifice the stock market to do that. I look at this as a relief rally as well, or just as a bear market rally. It could be that the bear market is over. There are a lot of indications that it is. But in a way, when I was looking at sort of the numbers last week before I went on vacation in the economy, it's kind of looking like kind of a bad scenario for what the Federal Reserve actually wants. Like, unemployment is still really high. The sort of consensus, when I say this is the consensus, it's not really a consensus. It's sort of an average of the estimates that I looked at from various different economists as far as how we could slow down the economy without going into recession and reduce inflation at the same time. 5% unemployment for about 5 years seemed to be average. A couple of economists wanted to front load that, like 7.5% unemployment for 2 years. 7.5% unemployment for 2 years would definitely throw us into a textbook recession where we have increased unemployment. But let's remember, an average rate of 6% unemployment would be better than the 1970s, better than the 1980s, and better than the 1990s. It wasn't until after the 2000s that we saw employment levels drop into that upper 3% range and kind of stay there. So, that's kind of the deal. I think we're just looking at a more normal economy going forward, where it's a bit muted. We're possibly looking at the best we can do is 3% growth. We're looking at probably 2% growth for the next couple of years or so, which is not terrible. It's just not as good as it was before. And it doesn't mean that there aren't plenty of investments opportunities out there. It doesn't mean that that's not going to be a big, one of the best places to invest. But also, let's remember that the unemployment here is pretty much going to be led by housing. It's going to be led by new construction. We're already seeing people lose their jobs in new construction right now. And they went from a point of where companies were struggling to find workers to now they're freezing. Tech is freezing hiring right now, but I wouldn't read too much into that because they tend to be early panickers, and because labor is their largest expense because they do have a ton of highly paid professionals. I don't know if you guys are familiar with how much decent programmers make in Silicon Valley, but it's nothing to sneeze at. You're looking at pretty much half the people there probably being the top 10% of income earners for the entire United States. So, we probably are looking at a hiring freeze. When they start massive layoffs is probably more when I'd be concerned. So, let me see here. Let me see here. Do you think the last few weeks are really friendly? I know this is a tech because of the job supply chain issues. Could there be further drops in the S&P 500? So my contention has been for a couple of months now that the bottom for the S&P 500 is probably right around fair market value in this case, which would be around 3,600 if you had a normalized economy where the growth in profits actually accounted for 70% of the growth, the increase in stock prices, and the increase in price to earnings multiples was about 30%. Generally, what you see is the price to earnings multiples evaporate and stocks retreat back to fair market value based on current cash flows. But it was a little bit more severe in this case, and could be even a little bit more severe than that 3,600 because those multiples were reversed, where price to earnings growth, the expansion of that multiple is what accounted for 70% of the gain in the stock market, which is not normal. And that had a lot to do with the massive amounts of free cash flow that people had. There was nowhere to park the money on a short-term basis and make money, so it forced a lot of people to invest. When we do see a normalization of the economy here, we probably won't see the same strong rallies that we saw in the stock market in 2020 or anything like that, partially because interest rates being higher means that you have places to park money in the short term, in the midterm, where you're earning something and you have zero risk of loss. And trust me, this is a really odd thing to think if you can do math, but if you can do math, but there are plenty of people that even in the high inflationary environment, if they can get a CD, a 6-month CD at 5% or a year-long CD at 5%, they'd rather be there than in the stock market. They may not be aware in many cases that they're actually losing money because the inflation rate is 8 or 9%. They may not care that they're actually losing money because the inflation rate is 8 or 9%. They're actually just more afraid of losing more money in the stock market. So, and generally, savers are savers and investors are investors. The last 14 years or so has forced a lot of people who were savers to be investors when they never really wanted to be. So the next time around going into the stock market, I expect that it's going to be a bit more earnings driven than it has been for the last couple of rallies, say 2019 and 2020. Yeah, Elon says, if I'm not wrong, SoFi numbers are already in Yahoo. Company beat expectations with its latest results. So let's take a look at that. And I would be happy to say that. Okay, up 60 cents after hours to 936. You see student loan forgiveness. Let's look at financials here. And let's see how fast it takes my stupid internet connection to pull this up. So they're not. Yeah, I'm not seeing them here. I'll probably cover that tomorrow or later on. So interesting. I'm not an expert. However, when I see that companies fail because they're massively in debt, surely there's a system to say if you're X% in debt, then a regular or someone else has to step in. There are a few industries where that is correct, but that's when you're dealing with industries that deal with a degree of public trust, like the insurance industry or the banking industry. But most of the rest of the economy does not have that protection. There's no such regulation. And that kind of regulation would be probably a step too far in terms of government intervention, meaning it's just a little too anti-capitalist. A lot of people confuse my politics in some cases for, I don't know what they confuse them for, but I don't think they understand how much I believe in capitalism being the best way. I mean, there are faults with capitalism, of course, but that in particular would be far too much intervention for me. So things like the insurance industry, they have a state-funded system in all 50 states that guarantees that the policies that you take on with a company are backed, but the company can be allowed to fail, right? So if a company is in trouble because their books don't look good, then the state insurance agent will step in. They'll cut up the book of business in terms of the books. They'll cut up their business in terms of the books, and they'll sell those off as like healthy subsidiaries to other companies. But they allow the company to fail, possibly to be reorganized, like in the case of AIG. In AIG, they literally just sold off a couple of arms of their businesses in order to shore up their balance sheet, and they are allowed to continue after their bankruptcy. But yeah, so there is no one saying out there no. It's the credit markets that say no. A company can borrow as much as the market will let them, and as much as they will allow to be allowed to borrow. A few exceptions to that: banking and the insurance industry. I'm sure there's a few more. that I don't know about, but those are the two main ones that are pretty heavily regulated. But you could own a restaurant, take out as much debt as you want, as long as someone is willing to do that, and the government's not going to step in. You could even be a giant restaurant company like Yum Brands and just borrow as much money as you want without that. So sparked interest. I did want to say thank you so much for the super chat. I don't do these for the super chats, but I do really appreciate it. It's nice since I've been gone for a while, a few days now, that we have people jumping in here with super chats. Sparked interest says also that that Faraday Future could be another Nikola. So Nikola has been interesting to me. Like how they have survived, I don't know. They have looked like they've been on their last leg since November of 2020, but I do know that they actively are testing their products in Europe right now. I don't know which product they're testing in Europe. I would love to know if it's really the hydrogen fuel cell version of what they were going to do rather than the compressed natural gas one. I like the idea of hydrogen fuel cells. I'm just not quite sure that I think we missed our opportunity to do that. So, yeah. But when it comes to Evergrande, China is almost certainly going to allow them to default on certain bonds, and then they're going to step in at some point and backstop the company. I think they're the second largest property holder and second largest bond holder in all of China. That is a company that is by definition too large to fail. The chief executive of Evergrande, though, it tends, when we see these cases happen like this in China, it's not necessarily like a case of fraud. It's just a case of poor business management. It happens here all the time too. Look at Enron. In the case of Enron, several people went to business. That was a case of outright fraud. But when you look at what happens in China, I don't really know if these executives who cut these deals, who create these companies that fail like this, if they are actually at fault in terms of committing acts of fraud. But I do know that Chinese executives tend to be smacked down pretty hard by the government for a lot of things that they wouldn't be here. So, and it's hard for us to know whether or not this was justified or not, whether this is a political move and all that. So, tell 666999 says, should I be worried about Chinese stocks? I'm into NEO, but with delisting fears, I'm tempted to pull out of all my Chinese stocks. So the only Chinese stock that I own, so I told you guys about sort of my changing opinion on NEO and me de-risking a little bit, meaning that I wanted to take some of my Chinese stocks off the table. So I started pricing my calls very aggressively when it comes to NEO with deltas of 0.35 or higher, eventually wanting to trigger a sale and generate as much income as I can. So I'm still going to keep my Xpeng stock, but do recognize that I understand the risk of delisting there. I think there's a much greater chance of delisting than there was just 3 months ago. I do know that there's negotiations going on that are all the time and in earnest and in good faith, and there's no one's talking about that in U.S. media. They are talking about that in Chinese media at this point. So, but no, I have de-risked when it comes to China to a degree. I plan on keeping Xpeng. I plan on riding that either to glory or into the ground. But I'm going to pull out of NEO just as soon as my shares are called away. Yeah. So that is kind of what I think about that. Let me see here. Hold on. Bloomberg breaking news. Robinhood is laying off 23% of its staff. So a lot of companies, so I haven't looked at Robinhood's underlying business here for a month or two, but just because of how their business is run and how they depend on volume for trading and how they don't have any other business really outside of order routing, it's not like a TD Ameritrade or a Morgan Stanley or TD Ameritrade has like Thinkorswim, that's their platform, but they have other lines of business than just making money off of trading. They do make a lot of money off of trading, but that is cyclical. When the market goes down, folks make less. Not just because a lot of it is they make less on options. Prices have gone down, so options premiums on some of the largest and like Tesla and all of these fintech companies that have gone down by between 75 and 94%, like in the case of Upstart. The value of those options has declined, which means the commissions have declined. And in a lot of cases, you don't pay like when you can buy a stock at no commission, they make money off of the order routing, and of course, they make money off of the spread between the bid and the ask. Those are just increased right now, so it requires volume trading to do that. Uh, Robinhood right now doesn't really have any other lines of business other than their margin and trading. And with margin income is probably going to increase, but people are reducing margin holdings as well. And so I think that's one of the things that's affecting them. But as far as their layoffs, I think a lot of companies are going to use this as an opportunity to trim the fat anyway. The the um, the the absolute mad rush in order to holy crap, 296.94% gain today applied DNA sciences. Interesting. Initiation validation of monkeypox virus tests. So get excited about the money you've already made with applied DNA sciences. Monkeypox is a very different disease than the one we just came through, which is COVID. It's going to cause some initial panic. Don't get me wrong. It's definitely going to cause some initial panic. It's going to make the news. Ultimately, it's not going to be a disease that affects anywhere near as many people in terms like COVID did. It's going to affect a lot fewer people. And if you can basically just kind of look at the spread right now, look at how it's spread. It's not smallpox, guys. It's not even chickenpox. Monkeypox is is quite a bit less transmissible in many different ways than COVID was. They're very different diseases. Also, it can be deadly, but once again, it's not like smallpox where you had a 25% mortality rate or anything like that. Very few people are actually going to die from monkeypox. And when you have an infection, it is really obvious. And that's one of the other things too. So not at first, of course, but it's really obvious once you're infected. But just in terms of the money that can be made off of this particular disease, I think this company is going to make some money if they're one of the companies that's in line for a government contract to provide either testing or a vaccine. But there already is a vaccine for monkeypox. There's not a lot in the way of supply at this point. They're going to go to the government's going to go to one of the big boys and give them the money to manufacture the vaccine. I don't think that I'm vaccinated against monkeypox, although I have traveled in Western Africa and in Eastern Africa a few times. So I got it inoculated against all kinds of things that I don't know about. So yeah. Let me see. You're open about your various income streams. If you had to start again, what would you do again? And what would you avoid with an effort versus reward in mind? So I was having this conversation today actually with my cousin. So he just started the lawn service business about a year ago, and then or maybe a year and a half ago, and he did fairly well, but decided to abandon it largely because of the amount of effort that he was putting in there, the difficulties with dealing employees based on how much you could pay them and how likely they were to stick around. That made it a very high effort business with kind of limited potential reward. And I would look at the potential rewards for any business that I was in and say, look, if you're looking at any business and the profit potential is only $10,000 a month, which is the case with a lot of things, then I want to be putting as little day-to-day effort into that. Like my jiu-jitsu academy, for instance, that has limited income potential. But then again, I'm doing something that I really love when I'm in there. And I get to, it's basically my hobby. I love jiu-jitsu and I get paid to do it too. But it has limited potential. I wouldn't concentrate on putting all of my eggs into that particular basket because of that limitation there. When it comes to something like a restaurant or the bar that I own, I don't have any expertise in the bar business whatsoever. I basically have a lot of shared business interests that I own in different companies. And I don't want to be the manager. I don't want to manage day-to-day things. I want to help in any way that I can. Like I'm going to train to work in the kitchen there to fill in when they don't have somebody to work in the kitchen or somebody needs vacation time. I'll clean bathrooms if they want to. But as far as the day-to-day business, I was having this discussion like, I can manage, 20 autistic programmers who only care, computer programmers who only care about numbers and getting a project to market, right? But I can't manage like regular people in large volumes for any amount of time. I really can't deal with their problems on a long-term basis. I really like data-driven, data-oriented, really fixated people on results. And that has really only worked for me in a technology environment and as far as managing people go. So some people are managers of large groups of people, and some people are managers of small groups of people who are narrowly focused on technology, and that's me. And so that's kind of where I would concentrate the most amount of my business is something which I'm good at, which is managing money and that sort of thing. But a couple of things. My first business that was an abject failure was a jet ski rental business. My second business, which was kind of a failure, was a software development company as well. My biggest success was a small investment in a restaurant in Texas that has now been paying me a steady income for 20 something years. And it really, basically, I helped out a friend and loaned him $30,000, which he wasn't able to pay back the loan at the time. So it turned into a slice of ownership. It took about 5 years, but now he's been paying me for a long, long time. But finding a way to invest with someone that you really trust. You can't trust everyone to be the best of the business, but you can trust them not to screw you over if you really know them fairly well. And I think that's one of the biggest things. But a couple of things that I wouldn't do again. I wouldn't do a vending machine business. It's not passive income. It's a lot more work than you think. And I've had a couple of different ideas for a vending machine business, although I am thinking about right now about buying one of those franchises that sells ice. And somebody keeps hounding me on that. And the more I look at it, the better idea it seems. But I haven't quite decided that that's what I'm going to do yet. But multiple streams of income is very, very important. If you look at the last 2 years that I had going through COVID and all that and the various disruptions that I had massive disruptions to my income in 75% of the businesses that I own. And the financial advisory business that I do, the business that I do from YouTube, that actually did well enough to pay my bills and well enough to keep me in a position where I have decent credit. It has impacted my ability to borrow a little bit because I had 2 years of business losses, but all of that is turned around. My academies are now profitable. The bar and restaurant that I own is approaching profitability in that case, and things are really starting to turn around. And even if we go through an economic downturn, my businesses are probably not going to be affected as much just because things have been such a struggle for the last 2 years for a lot of people. They're willing to spend money on acquiring new skills and experiential things. So, yeah. Oh, this is interesting. So Sandy Monroe Live did a series of YouTube videos at the Nicola facility. And so every time I say Nicola, somebody makes fun of the way I say it, and they say Nicola or whatever. I'm pretty sure the name was pronounced Nikola Tesla. And show the different products. And personally, I think that people have dumped so much money into the company that they can't let it fail. There's always a point to cut and run with any company. I think you may be correct in that. They have actually some big money backers and some people with a long history of backing. What they're also looking at too is that that Class 8 trucking in the United States is absolutely massive. This is still how most products are delivered to central warehouses. It's not through rail. It's mostly through Class 8 trucking. And this is just a massive business opportunity. Somebody is going to do this, is going to create a hybrid electric vehicle. And the other thing that I can actually see certain cities at some point declaring themselves carbon-free zones where they don't let you drive within city limits or within a downtown area or something like that, unless it's on battery power, right? And I do think that a hybrid engine is probably going to be the one that survives in Class 8 trucking. And it may be that we see battery electric only, but you got to remember a lot of trucking is done in really remote places in the United States. It's a lot of trucking is done in really remote places in Canada. And Nicola's idea of having the onboard generator as well as the battery pack on there with a certain amount of range, I think it's a great idea. It always was a great idea. I just think that Trevor Milton wasn't the person to execute anything but a scam, and that's entirely what he did. Which, by the way, he pretty much got away with that. So I don't know if you knew that. So, yeah. And so Sparked Interest says, thanks for all the content. I've been with you for a long time now. Thank you so much. You do these live streams, you do these videos, and sometimes you're not sure who's watching, but I've gotten familiar with a lot of the things you guys are, a lot of your names now. And I'm happy to have you guys along for the ride. And I really do it for you guys. You guys don't know this, but I tend to lose 1 subscriber or 2 subscribers every time I do a live stream. So I'm really doing this for the people who've been long-term subscribers. So let's take a look at SoFi and see how those numbers are popping right now. Let's see if there's any press that's put out. As when I looked last time, all right, so it's actually down a little bit from when I last looked. It was at 701 or something like that. Here we go. So, as I've been saying all along when it comes to SoFi, and I did sell some SoFi puts at $5 a share last week. I think a total of like 30 contracts. So I could have ended up owning 3,000 new shares if earnings had been bad here. But honestly, I expected earnings to be mixed, but it looks like earnings were a bit better than I think. And so while the political, fiscal, and economic landscapes continue to shift around us, we have maintained strong and consistent momentum in our business. And it's really about growing their community of users, and with this flywheel strategy. And like I said from the beginning, that's the strategy that banks have been going after for 20 to 25 years now, concentrating their business on their highest dollar relationships. They found a way to attract those highest dollar relationships with their so-called high net worth, not well-served clients. These are people that are making $100,000 plus who don't necessarily have $100,000 in the bank. And that $100,000 in the bank is a very a deliberate number there. That was the limit for a couple of different banks that I work with for the like preferred banking or priority banking, where you get, if you're a priority banker or a preferred banker or private banker or whatever it's called, then you get discounts on loans. You get, a lot of fees that are dismissed. I'm talking about like loan origination fees in some cases. And it really means that if you're wealthy, it's actually cheaper to be wealthier than it is to be poor. It's actually more expensive to be poor. And they found a way of taking the folks that don't have large deposits, but do have high incomes, who will have large deposits down the road. And they're starting to create this loyalty base of people that they are doing business with that other banks won't do business with in a preferential manner. And they're treating them in a preferential manner. And this is going to build brand loyalty as we go ahead. This is essentially the strategy that traditional banks have always wanted, but because they judge the success of a bank branch on assets on deposit, they were always going to miss the mark on that, because they were never going to see the guy that makes, the couple made from two nurses that between the two of them, they earn $250,000 a year, but they only have $25,000 in savings. They were never going to get the special treatment that the person who just saved $200,000 in a savings account does. So, that's one of the things that I found to be quite annoying while working for a bank. SoFi is still shooting up. And so what's the best advice for a 45-year-old to maximize money? I have savings, funding my pension, stocks, ETF. My split is about 50 in savings and pension and contribution, then 25% stocks. So let's talk about that. In terms of savings, so I am self-employed. My income is highly variable, and there's a good chance in any year that I would have zero income. And I'm serious. There are chances that I will have zero income on paper by the end of any year, and good chances that I'll be in the hundreds of thousands of dollars, just depending on the ebb and flow of businesses and when I dispose of certain investments. So very little of my money goes into savings. I am putting a little bit more into savings right now, just because my estimation of my living expenses has gone up because of inflation. So I tend to keep, and this is not advice for anyone else to do this. I do this because of my personal financial situation. I keep 3 years of my bills, my living expenses, my bills that are uncovered by a business operation. I keep 3 years of that in cash. It's not anywhere near as much as you think. I can live off of very little. Because I mostly only have debt through my businesses, and I have very little in the way of personal debt. So I keep about 3 years of living expenses in cash. It's been that way for years. When 2020 happened, at the beginning of that, I was pretty sure that I was going to get wiped out, that a couple of my businesses were going to go under, and I was going to have to start over. And my attitude was, I'm going to be back to zero, but I'm not going to be bankrupt. I'm going to be able to keep my house as long as this crisis doesn't last for 3 years. Right? That was my attitude, is that I would probably be ruined in every other way, except I'd be able to keep my house. I'm still able-bodied, and I'd be able to earn the money back. Right? Luckily, that turned out not to be the case. But it also means that every dollar that I make right now above my actual expenses, I put zero into. I'm putting a little bit into savings right now, like an extra $100 a month, which is literally just to get it up to where I think inflation is gonna be for 3 years of living expenses. But every other dime that I make in excess of that goes into either a property investment of some sort, a stock investment of some sort, or improvements on properties that I own, or reinvesting in my business. I'm actually trying to take a little out of my businesses right now and to reinvest in improving them. And I'm going to be doing some of that pretty soon. So here's a good question from Michael Will. So you spoke about having your viewers visit your bar for an event next year. Are you going to be giving us beginner jiu-jitsu lessons as well? I will not be giving you beginner jiu-jitsu lessons at the bar. That's called a fight. So I won't be doing that. But if you want to drop by my academy, we offer everyone a free class. If you live in the area, we offer you a free week of training if you live in the area as an enticement. And of course, to see if you really like oh man, this is going to be big. So PayPal is up big, $15 billion buyback and a double beat. I'm pretty sure last week I spoke pretty positively about PayPal, talking about what an opportunity they were and how well they're going to do in the future, and how fintech in general has just gotten absolutely beat up for no reason. So look, so far, PayPal was down 75% for the year. Upstart down 94%. Square is down 75%. Maybe Square in that case is a little more justified, but certainly not down 75%. But all of these companies are sort of unjustifiably beat up. They probably should have declined somewhat, but not 75%. And the fact that they're doing this well in this environment doesn't surprise me at all. This sort of high inflationary environment where you have rising interest rates, financials tend to hurt for a little bit initially, and then they really seem to shine. So yeah, you see here. So Hal says, I'm in your camp. My connection is slow. Let's see if your comment actually stays up. But Hal says, I'm in your camp, Jason, self-employed, and I have lumpy income, but I know risks, and I'm super happy working myself. In my corporate past, I could not stand the office BS. It wasn't that I couldn't stand the office BS. That was part of it, but I was actually really bad at it and tended to make a lot of enemies, not on purpose, not because I was like being a jerk, maybe just because I am. I don't know. But I did not thrive in a corporate environment. I just didn't thrive, and a lot of it had to be for my personality. And that's one of the things that really bothered me about working there is I never seemed to fit into the corporate culture. Now it doesn't matter that I fit into the corporate culture because I own a piece of the business and you can't fire me. So, but it's also made me a lot more willing to work with people and compromise, which when I was an employee, that was not something that I did very easily. I did that rather begrudgingly, which was to learn to compromise. Ownership position has given me a lot in the way of personal development as well. And that's one of the big benefits of owning a business too, and being responsible for everything, even if you're a minority owner and you're there to like help and you're there to smooth things over and you're there to provide funding. That's literally what you do in a lot of cases as a minority owner. You're there to provide money. You are an ATM and you expect a return. So let me see here. Would love for you to do a chat with David Lee or Tom Nash. I'd love to do a chat with them too. They are well above my YouTube pay grade in this case, so I'm not sure they'd be interested in my 20,000 subscribers. I think they all have probably north of 250,000 subscribers at this point. I wish I knew what their secret was and how they were able to grow their channel so much. I think part of it is I was doing better when I was making, in terms of the YouTube revenue, when I was making a lot of videos, but they take hours and hours for each one to do for me. And they weren't that great in terms of like the editing, but they were good in terms of the content. I plan on doing more of those too, but I really like doing the live streams and the live interaction. You guys give me a lot of my own ideas, good ideas, your own good ideas. You guys point out things that I don't see a lot of times. So PayPal up $10.35 after hours. This is actually pretty interesting here, and you should probably take a look at it. Private equity is absolutely snapping up companies this year, and they're doing it at a record rate. And they're doing that because right now looks like a lot of value. There's a lot of companies out there that represent deep value, and a lot of them are financials right now. And that's one of the things that folks aren't noticing, that with this decline, there are a lot of companies that are going on a buying spree. So PayPal surges on savings from cost cuts and elite investment. So PayPal Inc. jumped after saying it expects to record $900 million in savings this year from cost cutting, and that's a lot of what people are doing with layoffs. It's advanced cost cutting, which is laying off workers and shuttering offices. We don't need a lot of offices. Automation. So if you know anyone who's an automation programmer right now, they are so busy that they can't keep up with the work. I'm stunned at how much some of these automation programmers make. I know like 4 or 5 of them that do nothing but automate processes for businesses, and they do it as independent contractors. They're making $180,000 to $200,000 a year, and what they're doing is basically replacing jobs that other people did, and that's part of where that cost savings is coming from. So, and investor Elliott Management is now one of their largest shareholders. Another one of these companies that is swooping in, buying up a company that represents deep value. PayPal is one of those companies that I was talking about last week. So such savings will swell to $1.3 billion next year, the payments giant said. Expenses climbed to $6.04 billion in the same period, in line with the average of analyst estimates compiled by Bloomberg. They're in the midst of management changes, and I don't really care about personality changes, but the stock rose after hours. It had slumped 52% this year, steeper than the 18% decline of the S&P 500. It was actually off 75%. That's a year-to-date, 75% on a 52-week basis. So, yeah, interesting. $2 billion stake in the company, making it one of the largest investors. Elliott Management did. Let me see here. So payments volume climbed 9% to 339.8 billion, missing the 344.3 billion average analyst estimates compiled by Bloomberg. I did not know that they were doing that many payments in a quarter. That is absolutely amazing. Still, revenue climbed 9% to 6.8 billion, slightly topping the 6.78 billion average analyst estimates compiled by Bloomberg. To make matters worse, the results in the quarter were hindered by the strengthening dollar. That's actually really bad. So, excluding the impacts of currency fluctuations, revenues climbed 10%. So when you include the impact of revenue fluctuations, the revenue is going to have climbed a lot less. So they're pivoting away from a strategy of trying to add millions of new users, instead seeking to encourage existing users to use its app more frequently. And they're going to do that by adding more services and making the relationship more sticky. This is SoFi's strategy, of course, but SoFi's flywheel strategy when it comes to banking is not new. And I think that this is more of an indication that PayPal is going to start acting more like, in some ways, more like a traditional financial institution and offering a lot more in the way of services. The more services you have through a single company, the less likely that it is that you are going to leave that company for someone else. And it's one of the big things in the financial industry is that you're trying to get all of a company's assets in one bank, but yet for the longest time, almost every client that has any amount of money over $10,000 usually has more than one banking institution. Love the live streams, Jason, but will you be doing a part 2 to the NVIDIA video? I absolutely will be doing that. Yeah, absolutely. I'm actually working on that right now. The difficulty for me is the huge volume of material out there. I just need to find a different angle to attack on that. And like I could do an entire 30-minute video just on their molecular modeling technology and what that has to do with everything going on right now in not just vaccines, but some really exciting things with protein folding to understand. Basically, I think by the end of the year, scientists may understand how every naturally formed protein on the planet is going to fold. Then they're going to be able to predict how it folds, which which could be incredible in terms of correcting a lot of diseases that are a result of malformed proteins, which up until now have had virtually no treatments. So I think, and I could do an entire 30-minute video on that. I'm just not sure that anyone's interested in it. Michael Will asks, res ETF or real estate or both? So for the longest time, it's just been the res ETF, but I have been very tempted to buy some real estate if real estate crashes. I've also been tempted to do an Airbnb property. I got somebody in my ear who's telling me how great it is. I'm thinking about it, but it's something that I do not want to manage, and I'd want to have a manager do that for me. I tend not to have anyone manage my actual rental properties. I learned kind of the hard way. I didn't necessarily like that because there's a little bit of work in the beginning and then almost zero work during it. The advantage of a management company is they go to court for you, but I've whittled down my properties to just a few now. So, and I have long-term renters. So the chances of me going to court are significantly lower than they have been in the past. But in the past, I had one property in particular where I probably spent 5-6 days a year in court as a result of something that happened at that property, usually someone not leaving. Also figured out the best way to handle an eviction is this way. Rather than trying to evict someone, I would have a conversation with them first and say, hey, I hear that you're not going to be able to pay rent this month, and you're not going to be able to pay rent for the foreseeable future. The problem is in California is that people can stay on a rental property for quite some time. Maybe they can, if they've done it before, they probably know how to stretch it out to 4 or 5 months. And they probably really are out of money in a lot of cases, because of course, sometimes they're professional scammers. So what I'll do first is I will offer them a sum of money to leave in 3 days. I'll say, I will give you $1,500 to leave in 3 days, and I'll give you your entire deposit back. And then on the day that they do that, and my condition is you don't ruin the place, and I want to walk through the house right now and take some pictures of walls, fixtures, and all that stuff. Those are my conditions. And I usually come back with a witness on the day that they move out. They hand me the keys. And usually I call a locksmith right then to change the locks. But I give them in cash their deposit and the $1,500. And I'm telling you, for 2 reasons, that's way cheaper. Number one, almost every case you get is going to be thrown into small claims court. Number two, if they really don't have any money, you're not going to get any money out of them no matter what. So it's been cheaper in the long run for me just to offer people that don't pay rent. I'll give you 3 days to get out, $1,500 plus all of your deposit, and almost everyone has taken that. And since I started doing that, I've only gone to court once, and I didn't get anything out of that guy when we went to court. There was nothing to get. So I ended up getting screwed out of 3.5 months of rent, and then another month to rehab the place. He didn't destroy it, thankfully. He just really didn't have the money, and realized that the $1,500 plus the $2,500 deposit wasn't going to cut it. But I always bring them cash because I want them to be able to get the hotel or whatever they need to get back on their feet or move or something like that. So, yeah. So what is your thought about chip stocks? I think that for a variety of reasons that chip stocks, you should be investing as broadly as possible. I probably wouldn't try to concentrate too many of my chip investments. Those are things that I'm actually actively, regularly buying a share of NVIDIA here and there. I'm adding a share pretty much every time I have money. I have a bunch of stocks that I'm rotating through. Like if I have $100 today, I'm buying this. If I have $200 tomorrow, I'm buying that. But yeah, so I'm regularly adding NVIDIA, but directly AMD, Texas Instruments, Intel, those are going to be the biggest beneficiaries of the CHIPS Act when that goes through. So hi, Jason, for having a restaurant. How do you feel about alcohol stocks like Tap or Bud? Thank you very much for your input as always. So let's be clear. I'm not an expert in the restaurant industry or the bar industry. I'm invested in 2 restaurants. I'm not an expert in either one. I've worked in restaurants as well as a server, as a cook, all of those things. Do not consider myself to be an expert in this business. All right. When it comes to alcohol stocks, they are not the investment that they used to be for a couple of different reasons. There's been a lot of concentration of the industry. There's been a lot of consolidation. I will say one thing right now. There is a huge consolidation movement right now in microbreweries. And by microbrewers, I mean brewers that make at least 1,000 barrels a year. Anything below that is considered anything below that is considered like Pico Brewery or something like that. But I do think there's some opportunity there. Those stocks tend to hold up very well in a recession. Over the last decade or so, they've kind of been a disappointment in terms of investments, other than the last couple of years, of course. But I do think they can be a very good, solid portion of your portfolio. Alcohol is not a luxury type of investment stock. It is a stable investment stock. It is a part of our human culture, and it's not going away anytime soon. But InBev has been that one company that has been kind of a bit of a disappointment as an investment for me. So, but you would have to do some of your own research. One of my biggest failings is that even though I own a bar, I actually don't know crap about like hard liquor or anything about that or how it's going to sell. There are a number of ETFs that actually concentrate on sin stocks, on tobacco and alcohol. Although a lot of people have a moral objection to investing in tobacco, I get that. But yeah, it hasn't been a bad idea in the past. And it was one of those investing adages that alcohol stocks always do well, especially in a downturn. What is your read on the arms race? The U.S. still have superiority in the world? Topic came up for me again in the Pelosi-Taiwan visit. Yes, the U.S. definitely has superiority in the world in terms of arms. That was clear even before the Ukraine invasion. Let's be clear. Russia has some cool stuff. The problem is they only have a dozen of their cool stuff. Like in terms of their Su-57, they claim to have like 40 or something, but no more than a dozen have been spotted in flight around the world. And I think and the Su-35 too. I think they may have about 40 of those. No more than a dozen have been spotted in flight. It may be that a lot of them have not been maintained well enough. But when maintained to peak, their performance was really, really good for the generation of aircraft they were. The problem is the U.S. is a generation or a generation and a half ahead of them. China has some pretty advanced aircraft. Once again, the issue is numbers. They just don't have very many. So hold on just a second. I have a couple questions coming in here. A lot of questions today, man. Thank you guys so much. Let me see here. Let's look. Greystone Logistics Inc. We're talking about GLGI. They turn waste plastic into pellets. So there seems to be a recurring theme here that some of the things that I read about last week keep coming up in conversation, even though I haven't mentioned them on my channel. They turn waste into 100% plastic pellets. And I think I actually heard about them on NPR this morning. It could be another company that heard about them on NPR this morning as I was driving back from the airport. This company in particular, I would have to do a better job of looking through to make sure that these numbers are real, but a PDE of 6 in this case. Revenues all over the place. They have had positive earnings now since 2018. It's a small company. It's a really small company. It's 72 cents a share. 52-week range. It's basically down about, it's at the bottom of its 52-week range here, but volume is tiny. This is a very thinly traded stock. So we don't actually know if there's only 1,800 shares trading per day. We don't know actually what the value of the stock is. There's not enough volume in this stock to actually price it correctly. If you had, a few $1,000s to gamble on, like if you're planning to go to Las Vegas or something like that, you may have better odds with this. But this is actually a long-term strategy when it comes to recycling plastics. And there are a number of companies that are doing this. The idea is to take that plastic cup that you used and get as many uses out of it as possible until it's no longer possible to chemically recycle those. And I think it's a good business to be in for the planet. I don't know how successful this business can be. And there just isn't enough financial information out there, especially with the volume this low on this and the price so low. The market cap is only $20 million. This isn't a company that would normally be on my radar for a variety of those reasons, because I actually don't have a way of pricing this company based on what the market believes the value of this company should be. So with BlackRock buying up thousands of houses across the country, is that money that will be out of the market permanently, or will they leverage? Oh, no, they're going to securitize those homes. What they're going to do is to create they're going to do a couple of different things. They may create some REITs with those, where they leverage those homes to buy other properties, or they may actually create collateralized debt obligations or mortgage-backed securities, of course, with those different homes. And then, but it's basically going to be REIT investments. You're going to see residential real estate REITs coming out of those, where they're going to be professionally managed. They're going to be acquiring and disposing within those REITs, but it's an entire investment strategy in higher interest rates, where they are looking at more and more people being kicked out of the buyer's market. They are no longer buyers in this economy, and they're only going to be renters. And that is kind of where we are with that. So no, that money is not going to be out of the market permanently. In fact, it's going to be reappearing in the market as REITs. And they're going to, like I said, sell those REIT investments, take that money and reinvest it somewhere else. So no, definitely not out of the market entirely. But now, so hi, Jason, if you bought new at $40, do you sell them and cut your losses and patiently wait for 3 years? So I would need to know what you are talking about at $40. So what stock are you talking about at $40? Or what are you talking about at 40? Are you talking about NEO? Was that autocorrect? So last live stream, I talked about my opinions on NEO, and I have actually sort of cut my risk on that. I'm aggressively pricing my options, hoping to dispose of NEO and generate as much income as possible. Doesn't mean that I think it's a bad company. I just think that there's a lot of risk in the Chinese market right now, a lot of political risk. I actually think there's very little business risk to NEO. I think that even if they are delisted, they're going to survive and do just fine. They're going to be able to raise market on the Hong Kong exchange, money on the Hong Kong exchange. They're going to be able to raise money on the Singapore exchange. They're going to be able to raise money domestically. They're going to have zero issues whatsoever. But I do think that the ADR price would be severely affected here. And I think the stock price would be affected worldwide. So I am not waiting around for a return to $40. I have concentrated my risk in Xpeng. I'm going to keep Xpeng. But NEO, and there are a few reasons related to how they've handled their manufacturing process and their debt process and their ownership process as to why I'm betting on that before. So Anvar's here. Get ready for 4 questions. Okay. Let me see here. Really, final question. If you could visit yourself back when you were younger, what advice would you give? Fully fund your Roth IRA every freaking year. Even if you're in a tax bracket where it doesn't make the most amount of sense today, it's likely going to make a lot of sense in retirement. And I'll tell you why. The vast majority of tax brackets all around the world are kind of structured like this. They essentially have a middle-class tax bracket, which really mostly captures people that from in the United States, it would be people that households that earn between $70,000 and $160,000 a year. That's the vast majority of people that actually pay taxes. And I think that would be like right at, I think that's a 22% tax bracket. I don't remember actually where the cutoffs are, but traditionally that's where it's been between 70 and 140,000. Now I think it's more like 70 and $160,000, but that's in the 22% tax bracket. If you actually have any retirement savings at all, you're likely to be in the same tax bracket, right? When you retire, because both you and your wife will be getting Social Security and you'll be making withdrawals from your 401k or your IRA. If you were to make those all of your contributions into something that's tax deferred today, you're deferring 22% taxes today, so you can pay 22% taxes later. The problem is what you were withdrawing out of your once you hit required minimum distribution stage in your IRAs and your retirement plans, and you have to take out more than you really want to or more than you need to support your lifestyle, it may additionally put you into a higher tax bracket. The IRS did not design the 401k solely to benefit the retirement saver. They also did that to boost revenues in the future. The Roth IRA is kind of the way to get around that. Pay your taxes now, and then 20 years from now, 30 years from now, when you start taking withdrawals, everything you put in comes out tax free. All the gains you put in tax free. So yeah. Let me see here. But no, that's the one advice that I'd give myself now is that as soon as that Roth IRA was available in 1997, I should have fully funded it every year. And I didn't fully fund it every year. I was too obsessed with getting current tax deductions and not planning far enough into the future. Now, as I'm older and I'm approaching the age, I'm 10 years away from the age, I wish my Roth IRA was 10 times higher, because I will probably be taking withdrawals off of my 401k and IRA as soon as I'm 59 and a half, because I will not be working anymore. I will be living off of a couple of businesses that I own. I will maybe be doing some YouTube videos. That's about it. Yeah. So what do you think happens to crypto if some of the biggest exchanges? So I actually still don't think, I think crypto would be severely affected. I think that Bitcoin would go down to under $1,000 per each coin, but I don't think that it would collapse completely. Blockchain has too many utilities beyond just the tokens that are bought and sold on there, and it's a technology that's going to stick around forever. Coinbase may not last forever anyway. Something else may come along and replace it. And like I said, in terms of the actual use of the technology, it's not going to be solely about the transfer of value along the blockchain. It's simply not going to be that. So is it better to enter former SPACs like Palantir, Ionic, Open, and Matterport and the like before the suggested August earnings, or wait for more in general? So actually, if you go onto YouTube Sparked Interest and you just type in, how does a Roth IRA work? One of my very first videos that I put out, and that still gets like 100 views a day, 3 years after the fact, that is like either the number 1 or number 2 video out there. Just put it into the YouTube search bar. How does a Roth IRA work? And my video is like number 1 or number 2. And honestly, there are some months where that is the biggest bright spot on my channel. Okay, yeah. So in terms of former SPACs, you really need to be evaluating former SPACs on current cash flows at this point. It's 2 years down the road. Matterport is a company that I have concerns with. Open is a company that I have concerns with, but I think it represents a potential opportunity here, as it's probably been mispriced because of the coming correction in real estate. Palantir, on the other hand, needs to be reevaluated as a military contractor, as a government contractor, and not as this amazing growth stock. That's not going to last forever. Look at the growth trajectory for SAIC. I think they went public in like 2003 or 2004, and that's pretty much what Palantir is going to look like. In fact, I haven't looked at Palantir in a while. In fact, I try not to look at it because it's been one of my more disappointing investments. I only own like 100 shares, but it's the one that depresses me the most for some reason, and it's still depressing. So this is the one that Tom Nash, of course, has been one of the biggest and most vocal proponents of, and I think that he has a fundamental misunderstanding about the way government contracting works. Maybe separating some of the myth from the realities of this company, and maybe not understanding how many other people are involved in that space, how many other really large government contractors are involved in the sort of because really this is a visualization software. It is not a data mining software. It's not a data analytics company. It's a way of helping you to organize visualize data and to make associations and predictions based on data, right? But a lot of that is done with like either third party or additional installation after you sign up for the subscription product, right? So there are a number of other companies that do something substantially similar. Maybe they don't have a slick of an interface or anything like that, and they're not doing as much business in the private sector as I would like. And you have other companies that are doing things that are substantially similar, or making better strides in the civilian world. But not only that, like companies that you don't think of being involved in the same space, like General Dynamics has a product that's very similar to Palantir's products. Atomic Labs has one that's very similar to their products. SAIC has, not only that, they have some large contracts that are very similar to what Palantir has. So I don't see them as being all that special. I see them as performing in the long run a lot like any other military contractor does or government contractor does, which is 10% a year. How well they do in the private sector, I think, is going to be determined by how well companies like Snowflake do, right? And that's kind of one of my issues, is that Palantir has gotten away for so long on the mystique and the secrecy that surrounds the company. The idea that they may or may not be responsible for finding Osama bin Laden. Based on what I know about that case, I am not convinced that they had all that much to do with finding Osama bin Laden. I think it had a lot more to do with tracking with genetic genealogy, actually, meaning they got hits on second and third cousins, from genetic tests that were done from a fake vaccination program in that area. And they are able to figure out the general area that it was in based on blood relations that received a vaccine. And then that's right. I don't think that's not secret knowledge. That's out there. You can look that up. I don't know that's even confirmed either, but I do know that's a very good way of getting a general location for someone in that particular culture, is by starting off with distant relatives and sort of narrowing your way down using a genetic map of relatedness, and you could find a general area for someone first, and then it's your human intelligence on the ground to find. So I'm absolutely not convinced that Palantir had anything to do with that. So yeah, that's kind of my thing though. And Matterport is another one that I have issues with. Hold on, see here. Let's look at here. I kind of remind myself what it is that they actually do, and on trapped ions. Leader in quantum computing. I would absolutely avoid this investment. Because at this point, it's not an investment. It's simply speculative. And I'm going to take a look here as soon as it fills in. I can guarantee you that they have zero earnings. This is a almost a pre-revenue company. They have $2 million in earnings and $109 million in losses. I think it would be far better to wait until this company has actual revenues. In my opinion, this company has very little going for it. I mean, you can compare it to QuantumScape. It's a science project at this point. I am enormously excited about quantum computing. Don't get me wrong. I'm enormously excited about it, but how long it takes to get to market is an open question. So, how much time do you spend investing in rental properties? Very little at this point, because I have long-term renters who are good people. You can have one rental property out of 10 that takes up maybe some time, but an enormous amount of your brain power to deal with, an enormous amount of mental exhaustion to deal with. So I think that you should be very careful when it comes to rental properties. Be very careful when it comes to property management companies. You're giving away basically anywhere from 8 to 10% of your cash flow for very little in return after the person is placed, particularly if they have. But if you have to go to court, you may be very happy you have a property management company as well. But determining who is a good renter and who is not a good renter has gotten easier than it has been in the past. But also, the more you spend on the property, the nicer the property is, the more likely it is that you're going to have a nice renter in there. But to me, if I spend 1 hour a month on my rental properties after they're in there, that is too much. That is too much. Like I said, I have really good renters around. It's making it easy, but in the past, it has not been easy in a lot of cases. So let me see here. So just right off the bat, Shoeless Joe, I have not had any. I haven't looked at this stock at all. Stock with $1.4 million or 1.4 million shares trading hands. It is way at the bottom of its 52 week range. Its earnings per share is 0 right now, or negative 64. Is up quite a bit today. Earnings misses 3 out of the last 4 quarters. It's not profitable, never has been. It's not exactly a pre-revenue company, but they have increased revenues pretty steadily over the last 4 years. Something I would definitely keep an eye on here. LiDAR technologies, though, I've been investigating LiDAR technologies for close to a decade now, and have yet to actually pull the lever on any investment. Largely because seeing how that's going to apply and whether or not this investment is going to perform in the manner I expect for the amount of risk that I'm going to take, meaning that in a lot of ways, I'd rather just hold this LiDAR stock through, a small cap mutual fund or ETF rather than buying the LiDAR stock itself. I might be happy to do that. I don't know. This is a company that I'd need to investigate more, but I have not really, with all the LiDAR companies that I've looked at, I haven't invested in any of them. So Anvar, I wanted to say thank you so much for the super chat. You guys are like going wild on super chat today, man. So thank you so much. Man, maybe I should take vacation more often. I'm just kidding. I'm not going to do that to you guys. I am going to take frequent vacations, but maybe you won't notice so much because I don't do live streams on Fridays. But I am going to take more frequent vacations. Life is not meant to for you to simply pay bills and die. You have to live. So thanks, Jason. I'll be making some entries probably after earnings. Any thoughts on Livent, since Samsung, SDI, and LG building battery companies in the U.S. do need lithium and its chemical production? Yeah, I think investing anywhere in the actual raw material acquisition or precursor chemical part of the lithium battery supply chain right now, any of those could end up being a pretty decent investment. Even the companies that may struggle are probably going to get bought up for their assets if they have assets, or their technologies if they have technologies. That's what's going to happen to a lot of these smaller companies. They're going to get bought up by some bigger companies. But Samsung, LG, what was the other company? SK Innovation is building a big factory here. Some European companies building a big factory here. They're all going to need raw materials. So lithium is not rare, guys. It can actually be extracted directly from seawater as well. We have massive lithium deposits here. We have massive lithium deposits in very friendly countries. The problem is there just aren't that many people producing it right now, and we have to ramp up production in this case. And based on current lithium production, there's not enough to go around. There absolutely isn't enough to go around. So Sheila, I like to ask, since only digital LiDAR in the game so far, I would need a better definition on what digital LiDAR means. But yes, because I know what I think it means, but that might not be what it actually means. So I would definitely like some clarification on that. I'll be looking into oust for sure. I did get a new Patreon subscriber over the weekend. I don't know if you're watching this right now. I did get that message. I haven't responded directly to you. I haven't logged into my Discord chat or Patreon since Thursday because I've been spending time with family. But I'll come on there and I'll say hi. I want to make sure if you are out there listening or watching that you get onto the Discord chat. We have some really smart people in my Patreon group that provide some really good information, and they're very good at answering questions. It's non-political. It's non-confrontational, but I encourage you to share ideas in my Discord chat. If you want to be controversial or combative, I'm going to kick you out. So it's about sharing investment ideas and giving each other the resources you need to be informed. All right, that's kind of what my Patreon and my my Discord chat is all about, and that's how it's going to stay. Okay, guys, I've been on for an hour and 15 minutes, and I was a little bit late today, so I'm a little bit beyond the time that I really kind of wanted to stay. So I'm going to go ahead and get off because I need to prepare a few things and get ready to train tonight. But I will be back tomorrow. Thank you so much for all of these super chats. I said I don't expect it and I don't do it for the super chat, but boy, do I really appreciate it. So thank you so much. And I will see you folks tomorrow.